Hello, hi, my name is Crypto Sport, and in this video, I'll go through the latest economic data. Before we get started, if you can hit the like and subscribe button, currently sitting at 376 subscribers, hoping to hit the 1,000 mark as soon as possible. So let's get straight into it. The important payroll data has been announced for December 2022 today. Non-farm roll payrolls came in at 223,000 versus estimates of 200,000. The unemployment rate is at 3.5%, down from 3.7%. The labour force participation rate is 62.3%, up from 62.1%. The average hourly earnings is up plus 4.6% year on year, plus 0.3% month on month. So this gives the Fed more room to continue their rate hikes. They want to see the labour market drop, as in unemployment go up. Um, but if you take a look at the S&P 500 this morning, it has rallied on the back of that news, which is quite strange. It's trading at 0.39% up, pre-market at 380. So yeah, the data is good for the Fed in continuing its narrative to continue rate cuts, saying that they're not going to stop cutting rates in 2023. Um, so, as Caleb Franzen said on Twitter, two important labour market updates. Initial unemployment claims were stronger than expected. Private payroll, though, from ADP was stronger than expected after extremely strong 2022. The labour market is still resilient. The Fed doesn't like that. The Fed is trying to reduce aggregate demand in order to re-equilibrate the market at a lower equivalent price. A strong labour market equals strong aggregate income. Strong aggregate incomes equals elevated price pressures, which means that the price of inflation can stay up. The Fed can't fix supply, so they attack demand, which is attack the labour market. The Fed is prioritizing three methods for reducing demand, creating an inverse wealth effect, i.e., they want people to lose their jobs, increase the cost of capital, softening the labour market, which they're trying to do. In 2022, they achieved the first two aspects, but the third part is the main part they need to work on. What typically happens when the labour market softens, i.e., people lose their jobs? Obviously, prices of stuff begin to drop because people can't afford it, houses get repossessed, etc. As the rate of change in the unemployment rate accelerates higher, the Nasdaq's performance diminishes to negative year on year. So check the thread out. You'll probably learn something and give him a follow. It's a good read. It's also worth noting corporate insiders aren't betting on the market rebound. Recent market declines have pushed stock market prices lower, but executives and directors haven't been scooping up their company shares. For example, if you work for corporate companies, you can get access to shares. A lot of senior directors and stuff aren't buying those shares. They usually scoop up those shares. So that suggests that Q4 earnings, there might be a recession. So Q4 earnings will be kicking off at the end of January. So keep an eye out on that. In terms of crypto, we see Bitcoin trading around again the same mark, 16,700. It's been trading in the 16,000 region the whole month now. My opinion that what will affect cryptocurrencies this year will be tech layoffs, crypto layoffs, and just new regulations to obviously make sure that crypto is regulated. The US authorities are looking to intensify scrutiny of crypto industry in 2023. The SEC, the FASB, and Internal Revenue Service are working together to tighten crypto regulation and expand industry oversight. So yeah, a few days earlier, the SEC delivered a sample letter regarding the recent developments in the crypto markets, asking companies to consider in their disclosures the need to adjust crypto asset market development in their filings, generally including their business description, risk factors, and management discussions. The changes are set to be felt by many players in the crypto industry. It should have a multi-prolonged and ultimately profound macro and micro impact on the market. Um, Personally, I think it'll be a bad effect on the market to begin with, and then the market will obviously get used to this. We saw in France as well. The Bank of France, the head of the Bank of France, stressed that crypto needs to be regulated. Strict framework needs to be in place. So yeah, same with the European Union. The ECB announced that call for stricter regulation in the crypto market. So this will have an effect once this takes effect in the next couple of months. Keep an eye on that. Other news, we've seen crypto layoffs. Crypto lender Genesis lays off 30% of staff. We saw earlier in the year they laid off more staff. There's been a few alarming events this week: Hubu internal conflicts and employee layoffs, Silvergate Capital shares dumped, Genesis parent company DCG shuts down its wealth management division, Hubu laid off 300 employees plus unauthorized pie listing that happened on their platform. Silvergate share price dropped 42%. So yeah, if you take a look at the Hubu layoffs, you can see it there as well. I think personally that people are waiting for the market to react to the CPI data on January the 21st to see how the market develops. Keep an eye on that. It's also worth looking at it's also worth looking into just how the S&P 500 reacts to the data that's come out today. So yeah, keep an eye on that. If you found the video useful, please hit the like and subscribe button. I hope to see you guys again. Thanks everyone.